Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a sell short here on the Australian dollar. We don't trade this one very often, but this is a setup that's just a little bit too hard to ignore. So the short trade fires off at 0.7653. That means the stop is going to be at 6.3 for right now, so let's place our buy stop above there. I'm not expecting this to go too much through this 76.53 level, but I do still need to place a hard stop on it just to make sure that, in case it does decide to run through it, then, we get out of the trade. So we're going in 4 contracts here. We're entering in at 76.53, and currently right now, the target is going to be probably around 43 or so. So it's just going to be an all-in, all-out, 4 contracts, nothing fancy kind of trade. Now, what we're seeing right now on the Aussie is we're getting this kind of wedge formation, right? And we've been just kind of wedging its way higher, and you could even draw a line across these highs right here, and you can see that this is actually the breakout. Now, looking at these types of moves, whenever you get a breakout of this type of pattern, it very frequently likes to come back and at least retest these lows, and you'll notice where my target is right on that level. So looking for a reason, basically, to hop into the sell side, and we have one. Earlier this morning, we had this big old news spike higher, and that news spike higher, this whole area, the close really didn't make much of a difference. We just kind of went through that, but the overall peaking area of that news candle is going to be an area of large resistance, and the fact that this candle, even though it was a breakout of this initial range, it couldn't even close past that level. So we are seeing that strength already coming into that 76.53 level, making it pretty enticing. Now, I'm hopping in a little bit early before I've seen some confirmation of this level outside of that failed close past it. But that 76.53 area just looks really, really good for a way to hop in, at least for a bounce. And we're only really looking for 10 ticks right now. So, 10 tick stop, 10 tick target. If we do get that confirming candle, if this candle right now that's setting up goes red, then the stop will just go above this candle. So then we'll reduce our risk even farther. So let's just say that right now at 76.56, it ends up being the wick high on that move. That means that our stop is going to go on a 4-tick stop. Okay, so a 4-tick stop, getting in a little bit early, sometimes makes it a little bit more convincing. It makes it easier to stay in with the trade. So everything looking really, really good. We just need to see a little bit more confirmation. And just so I don't have to draw this line again, let's just draw a line right there, 76.43. So that's going to be the overall target. That's what we're looking for. We're looking for a push down to retest that level as well as push through it to retest these channel lows. You can see we bounced off of that so many times that we've got a pretty strong likelihood that it's going to do it again. So just kind of sitting along for the ride, see if we want to turn off of this level at 76.53. We're in short already, 4 contracts, risking 10 initially. That's going to get locked down right now from the looks down to 4 ticks. So looking for 10 ticks, 76.43. So we'll be back in a little bit and see if we can hop down and get that push lower. All right, so we're pushing into our target. This is the 3rd time now that we've tested it. Just need to see it get filled. There we go. We finally got that fill. We bounced off it the first time here, and it never ticked through it. We never got our fill there, and it gave us this little doji, and then tested it again, and then again, and we finally got our fill down here. So we got our 10 ticks locked in. The way that the Australian dollar ticks, if you're unfamiliar with it, it's $10 a tick, pretty straightforward, just kind of like crude oil in terms of pricing. So easy, 10 ticks, 4 contracts, 40 ticks, $400. Nice move. This is kind of what we were looking for. It's just that breakout pullback. And now from here, if it does want to go higher, it's more than welcome to. But the fact that it couldn't even close above that 76.53 level is a pretty big key, right? You could look at this in terms of possible failure all the way back down to, even start digging down into where that news candle started. You could look down to 76.15 or so. But the Australian dollar really starts slowing down the closer and closer you get to noontime in Eastern. So it's, the Australian dollar really starts moving earlier in the morning. That's where you get some of this nice movement. So trading it a little bit later in the day does mean that it's going to be slower movement. As you can see here, this trade still took, well, each candle's 5 minutes, so 5, 10, 15, 20, 25, 30, 35 minutes or so currently. And that's just kind of what you expect when you're trading these currencies in the afternoon. Really, the only one that moves really well in the afternoon would be something like the euro, just has a little bit more volume. But beautiful move down. It's exactly what we were looking for. Perfect rejection off of that 76.53. Easy 10 ticks, and we're all in, all out. So 40 ticks on the trade, $400. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.